So Hurricane Irene came and went and left a 250-point rally in its wake today. Do you think there is a connection?
It's a good question. Hurricane Irene, it was a pretty busy weekend up here in the Northeast and the rest of the eastern seaboard. Friday we had a relief rally by Fed's comments, and over the weekend and today we have a relief rally caused by Hurricane Irene, which maybe, even though there was a lot of damage and a lot of destruction, they say it wasn't as bad as expected. Plus, one of the insights I had on the hurricane and certain storms were, is that a sort of economic stimulus on its own? If you have $7 billion worth of damage that needs to be repaired, replaced, purchased, you get checks from the insurance companies or from the banks to potentially help offset some of those costs. Are you speeding up the economy on its own by another tune of 10 billion plus, depending on what the final number comes to? Plus you have a sort of support under the marketplace, with now the market shifting a little bit to what's the positive stimulus that could come out to now is there is no negative stimulus, negative sort of market connotation that's out there right now. So I think that we see this sort of complacent market going into a quiet end of the month. Marked with a big rally today, 255 points or so on the Dow, which is a impressive rally. Just in these 2 days, we had 150 on Friday and another 250 today.
And could you capitalize on the rally today? How was trading?
It's a good question. I mean, as usual, I made a few $100s, but I also felt like the volatility came out of the marketplace a little bit. So even though we were up, let's say 150 on the Dow or 170, it's most of the morning, a minimum of 150 to 170, we then slowly bled into the close to close right by our highs of the day. So it was definitely a grab the bear, as we've been talking about, and squeeze the bear a little bit until we go higher into the close. Some strength today, which we haven't seen before in the financial space, and some of the ETFs like the XLF, and Bank of America also closing right near its high of the day with a really nice push up on the day on Bank of America. So we saw definitely the motivation in the marketplace with the banks, and we saw the bears getting a little bit nervous, but they are still there. They're lurking in the bushes, ready to jump on any opportunity. So we should see in the next couple of days if we continue to rally or if we start pulling in again.
So this was one of those days when you should have been really disciplined and only take the trades that you're really feeling confident about?
Yeah, so one of the things that we do here in Shine's Room is that we try to not only educate and guide, but we also mentor people. And when we mentor people, that means that we talk about what the disciplines that are needed in the market in order to really survive and really do well. And today, if it wasn't your type of day, and some people really didn't thrive on these type of days, if you gap up and you stay up with the volatility obviously coming out of the marketplace, you sit on your hands. And through the education process and mentorship process, we try to guide people in order to be able to sit on their hands if it's not their type of day, and have their hands fully on the keyboard if it is their type of day. And so you have to find the right combination of both.
Do you expect this low volatility continuing tomorrow and maybe the rest of the week?
Today was slow because a lot of people were still coming into the city after cleaning up, I guess, their house or their yard, and also we're coming up to Labor Day weekend. This week is famous for being a slow week as far as volume-wise and volatility-wise, but these days you never know which day you're moving 500 points. So we sit by our keyboard at all times.
So, but probably it's a week to practice your discipline.
Every day is a day to practice your discipline, whether it's opening up your discipline or if it's sitting on your hands, as we talked about. But every day, not 90% of the time you have to practice discipline while trading, 100% of the time, because those 10% of the time can cost you your career, and you don't want to be in that position.
Okay. Thank you, Dan.
Thank you.